I call this meeting to order. Roll call.
Final instructions to turn the mic here. Committee Member Tucker.
Here.
Committee Member Ridgway.
Here.
Committee Member Earl.
Here.
Committee Member Shoemaker.
Here.
Committee Member Salazar. Not here.
Isaac, we'll ask you to review the Measure S expenditures, revenue and expenditures.
Thank you, Committee Member. The report analysis we'll be looking through is for the fiscal year of 17-18. It's going to be very similar to what the last report. Just a refresher from our last meeting, we did change to a biannual meeting. So to make for that adjustment, we had a report that was similar to this one. This one's more connected to the financials itself. So we'll go through the report in the same format. The main difference between the two is you guys will certify it at the end. Okay. So we'll go ahead and turn to page 1, which is a summary analysis. As you're aware, Measure S has different parameters in which it's got to qualify for a supplement to be transferred into the general fund. So we'll kind of walk through the steps and make sure we meet those parameters. So item number A, you have the public safety actual expenditures. And again, to verify these numbers itself, we'll go back into the report and recertify them. Okay? So for the police department actual expenditures, you have 5.8 million. For fire, 3.4, for a total of 9.3. That is the total general fund expenditures. The total general fund expenditures for the year were actually 14.4 million. Okay? Bringing us to a percentage of public safety expenditures for 64.84%. So for the budget of this dollar amount, for original budget dollar amount was actually 12.7. So that brings us to a percentage using the formula of 79%. So you can see within this formula that the 64% well meets that parameter of 59%. Okay. So the next column itself is dollars required to spend by public safety. And so again, within the fiscal year, we spent 8.5 million for public safety. The amount actually spent in excess of percentage is 841. So again, we're well meeting parameters of what we need to be doing. The available amount of transfers from the Measure S from the direct expenditures paid out on Measure S. Basically what this stands for is the excess between the direct allocated costs within the Measure S itself, Fund 295, that can be supplemented into the general fund. We did make an actual supplement to the general fund for 1.2 million. General fund expenditures in excess, Measure S transfer, 494,000. And the ending fund balance for Measure S had a total of $741,011. Any questions until we move into the detail? Okay. So page number 2 is your actual budget for the fiscal year of 17-18. And again, you can see the amounts of which were highlighted there for safety departments. So you have safety support, our police support, police operations, police administration, fire operations, and fire prevention. Okay, total budget for the fiscal year 12.7. So again, that ties back into the calculation, which meets our parameters for the 94% or the 54%. Sorry. So the next page, we'll go into what actually inquired within the general fund itself. So if you total those same departments, you come up with the amount of 64%. Give you a minute to review those numbers. Is there any questions about those dollar amounts? Okay, we'll go ahead and move forward. Now we'll move on to the financial statements. These statements are coming directly out of my financial accounting software. So they are audited into this standpoint. They're tied back to the financial statements. So again, you can see that the reserve for the end balance at total at the bottom of the page, 741,000, which again ties back to the beginning of the balance at the beginning of, or at the end of the report on page number 1. Okay. So going on to the next report, you'll see an income statement. I'll give you a little time to look through these expenditures. This is where we actually need to qualify that these expenditures are allowable. So you will see the revenues coming in for the sales tax and also interest that the fund incurs, and also reimbursements. The reimbursements column itself, just for a little clarity, is when we have overtime, such as the marshals that are paying us for that time, they get reimbursed. So the employees within this department has to come back into this fund. Okay. Welcome, Carl. I'll go ahead and give you a chance to catch up. We are on page 5. We're currently reviewing the expenditures in the income statement of Measure S. Okay. Is there any questions regarding these expenditures?
On the income statement, I've got a couple. So it looks like police support under reimbursements.
Mm-hmm.
So amount budgeted was 0, but there was 18,000.
Correct.
And then
The amount is reimbursed is basically overtime, and I think in this sense it's the U.S. Marshals. So it's basically on a need-come basis. So it's actually just reimbursed cost.
okay, and then if we go down to under police support, so salaries is over the projected amount. And then it looks like salaries overtime is over the projected amount. And it looks like holiday pay is over the projected amount. Health insurance on the employer is over the projected amount. Uniform allowance is over the projected amount. Cell phone stipend is over the projected amount. And then field operations, so equipment is over the projected amount by 18,000, almost 19. And then fire is over on supplies.
Okay.
So can you help me understand? So just play what if with me. How does this get balanced out? I mean, I know that on the next page we're still total wise, right? The projection is $1,591,000 and the actual is $1,590,000. But how do the budget items get in the end? What magic is done to balance those out? Because it just seems odd if we're going to budget, not to pick on the fire department with supplies, $1,500, right? And we've actually spent $15,000.
Okay. So in the budget process, we do identify expenditures such as supplies and things of that nature. Labor is a calculated amount. They are based estimates. So we're running the calculations and summaries and PERS and overtime and getting it to the best we can and as close as we can. So for a variance level of maybe 5,000, I think we've actually come pretty close to hitting our budget marker. Considering the budget just for that one department is almost $200,000.
Okay.
Okay. The equipment expense, 18,000. We can get into the equipment expense a little bit later. That is a budget dollar amount overall. What has happened is we've actually done some financing and purchased some vehicles. We'll see that number come back and we'll discuss it. I'm sorry, was there another one?
No, I mean, I get what you're saying, Soma, but I guess my question as well, so uniform allowance, wouldn't that be a fixed cost?
It can vary depending on the employee, though, depending on the employee that's in there and things, the allocation that comes across. So there also is a true-up at the end of the year where we do an allocation and put some of the labor back.
To offset.
So, for example, we have an accrual period where your last payroll, there could be 1 week is in this fiscal and 1 week is in next fiscal.
Right.
So really what's going to happen is you're going to get that true-up at the end of the fiscal year.
Okay.
So there can be a variance from that standpoint because of the accrual. And that happens at the beginning of the year because you're pushing it back to the prior, and it happens again at the end of the year to push it back into the correct period. So when we do our calculations for budget, you're doing it on a fixed 12-month span, so you do have that variance.
Okay.
And you're going to see that across the board for all departments. Okay. Other questions? We'll move on. So the next page that we'll move past is into page number 7. This is the item in the general ledger. It's a copy again right off my accounting software. This shows the supplement into the general fund for a budget amount of 1.2. The item that you see for the adjusted entry is for 1718. What we're doing is actually accounting for some lease payments and structuring them into the appropriate place. So we're transferring the leases because of our financial statements. The lease payments should be in a general fund, not in a special revenue fund, which this is classified. So we're pushing the budgeted amounts into that dollar amount into the general fund as a transfer to offset those costs. And the description is noted at the bottom. Any questions? No? Okay. We'll move on to page number 8. Again, another report straight out of my accounting system. These are the payments that we received from the State Board of Equalizations for the sales tax themselves. We'll go take a moment at the end and actually go through each check and kind of certify the dollar amount so that you have a time to review these numbers. The one item that I will point out, again, you have a sales tax 50% accrual. We do accrue the payment that we received in July. We accrue 50% of it. The last item that you see is an allocation in which happened because for tax themselves, they actually came up and created a new department. It's called the California Department of Tax and Fee Administration. It's a new administration. They're kind of working through the kinks and came up with their own methodology and how they're actually doing these tax allocations. So what they did is actually send us a report saying that we have some estimated revenues that you did not receive, but you will receive it in the following quarters, which we did receive. So as an accounting standpoint, if I can measure it and it's foreseeable in the current future, I have to book it. So you see that amount booked there, but it's actually an open receivable. Trust me, it was fun for me too. Yeah, California Department of Tax and Fee Administration. Mm-hmm. And some of the other revenues you'll see is, again, interest income. And just so you're aware of how interest is calculated for each fund, we take the overall interest as received for the bank's accounts and spread them across all funds that have a foreseeable balance that we can measure. So the larger the balance, the larger the allocation. It's merely a ratio allocation across the board of all funds. Okay? The next page, page number 9, we'll get into our equipment expenditures. The police department, which is again a number we just discussed, equipment for $18,000. There is a footnote at the bottom of the report. What has actually happened, and we've talked about this in prior meetings, I believe, is the city has taken out a lease of purchase for 11 vehicles, for brand new vehicles for PD. As you're all aware, the PD's fleet has been depleting and getting aged, and this is our efforts to try to recoup and get back to where we really need to be. Although we're not fully structured to where we need to be, it gave us a large jump to where we can kind of fulfill some of the needs of the current staffing, okay? Because if you don't replenish your fleet and get them revitalized, in essence, what you're doing is really spending more expenditures to actually keep that fleet up. So this is our attempt to be able to compensate for that. So the purchase that they actually did was for 10 new Ford Explorers and 1 Ford F-150 pickup. And the lease was actually through Umpqua Bank, and the interest rate of 3.26. So as a fire department standpoint, they do have some supplies, as you can see from L.S. Curtis, hoods, a new prop door for their fire training facility, a helmet, medical supplies, radio and fire codes, and some other equipment in that nature. Is there any questions? Turnouts and helmet, 2 sets of turnouts, and I want to say 4 helmets. Okay. So the remainder of the report is actually copies of the actual checks received from the state of California. I'll give you one moment to kind of go through these checks and certify the amounts that are reported to the accounting software, which you will find on page number 8. Okay, thank you. That concludes my report. We can move on to item number 4.
I have a question on, hold on a second. Do I have to go up there? R- 1057 Mill Street, Rose Robertson. On the first check, I checked all the checks, a copy of the state of California checks, and the first one states on your journal, 7/19/2017 for $58,000, but on your copy of the first page 11, it shows $154,700. Why is there a difference there in the journal?
In the sales tax that we receive in July, 50% of it is accrued back to the prior year. So you see the allocation is done in the same thing for the June. See the sales tax 50% accrual. So we do a 50% accrual of the payment that we receive in July back to June.
Okay.
So that's why if you add that number, multiply it by 2, you'll get the number of the check.
Got it. Thank you.
You're welcome.
Scott Robertson, 1057 Mill Street, wearing my citizen hat, interested citizen hat, which at heart I am. 7/24/18, there's a check. It's not listed in the journal. Where is that? Where's the actual check?
720.
There's a check dated 7/24/18. Yeah.
That's the 50% accrual. So again, if you look at the 69,000
Mm-hmm.
and you multiply that by 2, same thing.
Okay, so 7/24/18 is a check for 139,439. Where's that half? That 50% accrual?
1 second. Yeah, it's the line item, second line item from the bottom, sales tax 50% accrual, 69,719 and 55 cents.
Where's
That's
the go ahead.
It's the second line item from the bottom.
Okay, so the so
Same thing. It's a 50-cent accrual, so you cut the check in half and you get that dollar amount.
and you're accruing that because you're allocating to a different budget time.
Correct.
Is that correct?
Correct.
Different fiscal year.
Mm-hmm.
And the same thing for the state of California, the first one?
The state of California,
58,000 one?
the state of California Department of Finance Administration is actually an estimate given to us by our Muni Services and that department. There was a reconciliation, and their statement was basically we have some unpaid estimates. They didn't have a true dollar amount, so basically I had to book a receivable. So in accounting, if it's foreseeable and it's measurable and it's in the current future,
pay you
you
for it.
have to book it.
Okay.
And we did the same thing for the general fund.
And what happens if the sales tax goes down in the meantime and we don't get that full amount?
We did receive it. We actually received more than that.
And then the reverse CD, pardon me for all the questions, I
fine.
apologize. Reverse CD TFA sales tax missing payments, 61,243. What does that refer to?
61,243.
Yeah,
That's
the very
amount I
bottom
just
there.
talked about.
So that's the amount that came from another accrual period. Is that correct?
It's coming from actually this fiscal period that we're reporting, so it had to be booked.
Because that's the actual amount. That's the
It was an
reconciliation
estimate.
amount.
It was an estimated amount.
Okay. Finally, last question. Just refresh my memory. I know we always in the council we talk about approving Measure S.
Mm-hmm.
When do the actual Measure S expenditures get discussed? Who discusses them and who agrees on them?
That's part of this committee, and then they will report back to council after this meeting.
Like who decides that a new helmet needs to be purchased?
City staff and city manager.
And who decides that that's a Measure S expenditure as opposed to a general fund expenditure?
City staff and city manager to make
And
sure it
how
meets
is
the
that?
parameter.
On what basis are those decisions made?
Well, most of the decisions are actually done by the budget process. So in that sense,
Okay, so we can talk about those categories during the budget, during the 2019-20 budget coming up in July. Is that correct?
we can talk about what that budget looks like. Yes.
And as part of talking about that budget, we can talk about what classifications, what differentiates an expense from the general fund from a Measure S expenditure. Is that correct? And how that's made, and what type of equipment is, and salaries are allocated to Measure S as opposed to the, I'm just looking for a formula.
Okay. The formula itself, basically the budget that's run through is for Measure S itself, the direct allocation, it's 2.5 bodies of officers, and there's some standard expenditures that are put into there each year. So if you look at the prior budgets, it doesn't grow too much overall. You'll see a lot of the same numbers. But is it budget? It does done with the budget process itself.
The actual details are agreed on during the budget process. Is that right? Okay. Thank you.
Any other questions? Then I entertain a motion.
I do have,
Oh, go ahead.
for the fire chief, so the stuff from Cascade, would you consider that an emergency expenditure? And the only reason I ask, it looks like it was the end of the budget year.
It would be, so what we did was looked at expiration dates on turnouts. So we have a 10-year lifespan for them. And at the end of the year, there were several that were either had expired or were getting ready to expire. So we made those purchases.
Thank you. That's all.
I will entertain a motion to determine that the city has met and exceeded the general fund obligations and that the Measure S funding has been expended in an appropriate manner. Is there a second?
I'll second it.
It's been moved and seconded. All in favor say aye.
Aye.
Opposed? Motion carried.
Thank you.
Is there any other business or comments? Then I call this meeting adjourned.